Gold, ladies and gentlemen, is the golden rule in India. Now, before you make conclusions, this is what loans in India have been showing. Be it banks or be it NBFCs, everybody is shoveling out gold loans as customers milk in soaring gold prices. You heard that right. Now, this is happening even as barriers rise in personal loans and credit cards. Banks across the country handed out more gold loans than any other type of retail loans, including home loans in FY26. At least that's what Reserve Bank of India data showed till the July this year. Now, while banks disbursed 70,675 crores worth of home loans, the figure for gold loans stood at 85,432 crores. According to the data from the RBI, loans against gold surged 122% year-on-year as of June, while data from the microfinance industry, which has been the biggest source of loans when it comes to small borrowers, showed outstanding decline at 16.5% during the same period. Now, this is a surprising trend. The momentum is expected to pick up further after banks were recently allowed by the RBI to lend more against the precious metal. Now, gold prices have risen 23% this financial year to touch 1,09,390 per 10 grams on September 12th. Now, when gold prices go up, borrowers get more loans for the same amount of gold. While some of the increase in gold loans was indeed to higher gold prices, experts also said that the lack of other easy avenues is driving many customers requiring urgent short-term loans to turn to gold. So, if you have a gold deposit, you might as well get loans easily, at least in India right now. Now, Jinay Gala, director at India Ratings and Research, spoke to Mint and said that the unsecured channel person loan credit card has gone a little bit tighter for people to raise money from, and many are also using gold loans to fulfill working capital requirements. Now, this is a surprising trend. Gold loans are not only used for personal loans, but also people are hedging gold for business loans. Now, if you understand the gold loans in India right now, gold loan disbursals grew 40.9% since the end of March and 122% over the same period last year. Home loans, on the other hand, rose 2.3% since end of March and 9.6% on a year-on-year basis. To be sure, outstanding gold loans stood at 2.9 trillion rupees. They are still a fraction of the 30.8 trillion housing loans. So you see, gold loans are still a very small fraction of the overall housing loans, but the number is steadily rising. Now, the rising price of gold has encouraged more people to use it as a loan collateral. And banks and NBFCs, well, they're happy to serve. At many banks, about 60 to 70% of the gold loan book comprises of repeat customers or those who have borrowed from the lender in the past. Traditionally, gold has been a stronghold of non-banking financial companies focused on lending against gold. But now, in today's day and age, banks, PSUs as well as private sector have boarded on the gold loan wagon in the last few years. Banks like SBI and Bank of Baroda have been pushing gold loans. The competition has intensified between the public and private sector banks. The surge, ladies and gentlemen, is expected to continue after RBI allowed lenders in June this year to lend more against gold by raising the so-called loan-to-value ratio. At the end of September 2024, retail gold loans by NBFCs stood at 1.7 trillion rupees as against 1.5 trillion from banks. In the incremental flow of credit, gold loans have surpassed housing loans. There is also a regulatory angle to this surge in gold loans. The RBI has been clamping down on the practice of classifying gold loans as agricultural gold loans. The RBI states that there has to be a difference. So while banks can lend up to 75% of the value of gold to retail customers, many lenders give up to 85% when it's pledged by borrowers engaged in agriculture. So you see, ladies and gentlemen, gold loans by value and by volume have been going up in India. The gold rate has been rising, and the world's original currency is gifting Indians new forms of loans from banks and non-banking financial companies. This is a developing story, and we at Mint, of course, shall keep you posted. For that, stay tuned to Live Mint and subscribe to our channel right now.